Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. With thin volume over the last 24 hours due to the US market close for President's Day, the US dollar has remained stable with little movement around 104.20. Looking ahead to this Wednesday, the US Central Bank's meeting minutes will be released, which will give some insight in the policy's decision from 3 weeks ago. Despite global market expectations of a rate cut, US inflation and a tight labour market are suppressing these expectations. Although the general consensus is that the Fed will implement its first rate cut somewhere in June and with an additional rate cut in July. However, there are some viewing a possible cut in May. Looking ahead to this Thursday, we get the Australian Wage Price Index, which may cause some fluctuation in the price, and therefore keep a close watch to the top side, as the market is expected to clear the level of 65.40 and move on towards this key area of the 60-day moving average seen around 66 figure 30. Any pullback sees minor support at 64.90 and the base around 64.25.35 in the short term. With the bullish divergence clearly seen from the MACD, I still feel that this current pattern should unfold to the bullish case. The euro, well, the market still remains in this down channel, but slightly edging towards that top side region of 108.15. A break above there should give further scope on towards the level of 108.70.80 to 109.35.45. And with the recent hammer posted, any pullback likely to be shallow with the support seen at 107.25.35. The dollar yen, well, the market did attempt to move lower, but found support ahead of that 149.75 minor level. In view of the current pattern, though, the market is still struggling, but the rebound off the midway point has given the bulls a little bit more confident in taking the challenge upward that sees the resistance around 150.60.65. In a broader sense, I still feel the downward challenge may eventually break the level of 149.75, which should open the way to 148.80 to 148.15.35. Moving on to sterling, with limited data, the market is somewhat lackluster in, as you can see here, still holds above the level of 125.45. A key point, as if breached, would confirm the outside range day, but after 3 attempts, it's still anticipated the bulls will defend this level and eventually see a move on towards 126.20.30, and then the objective above at 127.15.25, and then reassess from there. Gold into the 4th consecutive day holds to a steady climb after rebounding from the month lows around 1,979.84. In light of the pattern, I still feel the market has potential to head higher towards 2018 onto 2024 and the objective around 2036 to 38. Any pullback is expected to be shallow with support seen around 2000 threshold. Wrapping up with oil, the market still holds its gains, but still needs to confirm and negate this recent outside range day. Clearing 78.5 to 78.60 would give us a further indication from this inverse head and shoulders measured move, which is seen around $81 to $83 a barrel. That is the objective. Any pullback likely to be shallow, with support seen at 76.70, but a break of 75.5 would negate the top side and see a fall back towards this support once resistance at 73.45.75. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.